So we know by now that tax sale investing is an incredible way to build long-term sustainable wealth. But if you spent any time at all online researching how to invest in tax liens and tax deeds, you've probably seen a lot of advice out there that you're just not sure about. A lot of advice that just doesn't sit well with you, doesn't make sense. The problem with some of the advice that is online is a lot of it is completely unrealistic. And following the wrong advice, following an advice that you just stumbled across and you think this person knows what they're talking about, is going to cost you money, time, and even your chances for long-term success. Before we get started, my name is Casey Denman. I've been investing in tax-defaulted real estate since I was 18 years old. That's more than 22 years ago now. And I've been helping other investors, brand new investors, for more than a decade now through my videos, books, podcast, and the comprehensive training academy that I offer at taxsaleacademy.com. Unfortunately, during that same 10-year period where I've been in the tax sale education space, I've seen literally dozens of so-called experts come into this space trying to make a quick buck. And I often get sent clips of some of their suggestions, and I can't help but get frustrated as somebody that's been in this business for a very, very long time. There is zero qualifications in order to start shooting videos and calling yourself an expert and creating some sort of course. So today I want to break down 10 of the worst tax sale investing tips that are floating around online. More importantly, I want to explain to you what actually works so you can build a strong, solid foundation that you can then build your tax sale business from, instead of making some costly mistakes that a rookie out there suggested to you. Let's get right to it. This one really irks me, and that is borrowing lots of money to invest from day number one. There's a lot of people online that say you can borrow $50,000, $100,000, get a loan, go out there, borrow heavily however you can, and then they'll even oftentimes sell a way to fund your business. They'll have a business funding idea or a loan processor or a loan service that they get a kickback from. They'll even sell that and package it with some sort of tax sale investing program. The problem is that when you're a beginner, you do not need to risk other people's money, your credit, and your financial future trying to figure out what you are doing. Yes, I get it. Funding is necessary for some investors, but signing your name to a guarantee for those funds in a business that is completely new to you, that's absolutely absurd. It's like giving a 16-year-old the keys to a Lamborghini. And even those that are referring to it as LLC funding or business funding or whatever they want to promote it, you're often still going to be signing a personal guarantee. You have to think about it. If you are the lender, are you really going to go out there and just loan money to a brand new LLC that is managed by somebody that just learned the tax sale business? Obviously, you aren't. So somewhere along the line, you're either going to put up collateral and or you're going to have to put up your personal guarantee. Now, when you screw up, because most people do, especially early on in their tax sale career, you will be on the hook for the money for the rest of your life. That money, outside of perhaps bankruptcy, is going to be yours to be repaid. And guess what? A lot of these creditors that you aren't able to repay because you made some tax sale mistakes with their borrowed money, they will come after you very aggressively. They will get judgments. They will garnish your bank account. They will garnish your wages, and they will go after your assets. Because a lot of times they will get that judgment and they'll get over to an attorney. That attorney will come after you aggressively because they get a cut of the action for whatever they are able to recover. It's a very, very ugly cycle. And I've heard a lot of horror stories about this. My suggestion here is to start small. There's plenty of tax liens and tax deeds out there that you can get for less than $1,000 or $2,000, and even less if you are very patient and know where to look. Sure, I've told this story before. I've used credit cards when I got started. There's people inside the Tax Sale Academy that have used credit cards to start. But they're not starting with credit cards where they're blowing $50,000 or $100,000. I'm talking about $1,000, $2,000. I'm talking about balances on those credit cards where if everything just goes horribly wrong, you still have the ability to pay it back without going through the whole debt collection lawsuit process. So when you're just starting off, you need to focus on learning, focus on the knowledge required to build a long-term successful foundation for your business. Do not focus on going out there and finding money. Because if you put all your focus on trying to find some sort of funding that you hope will work, you'll probably eventually get bored, you will fail, or you might not be committed to this business, and that money still needs to be repaid. Number 2, buy every cheap property that you see. This is a very common trap, thinking that cheap automatically means profitable. Some people believe a property is cheap, just buy it, because you can always sell it to somebody for more money later. That is absolutely wrong. And I've seen a clip multiple times now people have sent to me where a so-called expert says every property for $50, $100, you should go out there and buy. Wrong. Just because something is cheap does not make it valuable. Buying a whole bunch of cheap properties can actually cost you a lot more than you will ever make because of things like holding costs, taxes, HOA fees, maintenance, liabilities like environmental hazards, access issues, other legal problems, and of course, low demand. You buy a piece of property out in the middle of nowhere that you did not do your research on how you will sell it, you might get stuck with that property. And again, it goes back to the first one, your holding costs, those taxes, those dues, all that stuff is going to eat up every bit of margin. My suggestion here is if you want to go after low-cost properties, that is absolutely fine with me. Just make sure you research very, very thoroughly what your holding costs will be and the potential buyer demand based on your specific selling objectives. Next one. I actually did a video on this one not too long ago, and it kind of irked a lot of people, I think. And that is to hire a whole bunch of VAs so you can scale your business faster. Let the VAs do all the hard work for you. This one really frustrates me. Some people say, go out there, hire the VAs, and pay them $4 or $5 an hour. These are overseas VAs. Sometimes English is the second or third language, but for $4 or $5 an hour, they can go out there and they can research all of the properties for you. First off, research is the single most important aspect of determining whether you are successful or not successful as a tax sale investor. So paying somebody that you've probably never met or that you found online that is overseas, that knows nothing about real estate, that you're paying $4 or $5 an hour to, in order to help you determine where you need to put your hard-earned money, it's a horrendous idea. Now, unless you are investing tens of millions of dollars every single year, it is completely unnecessary to hire any help. And the big banks that do have tens of millions of dollars every single year to invest, guess what? They're not paying a VA from the Philippines or somewhere $4 or $5 an hour. They're paying their analysts $100, $150, $200,000 per year because they are skilled at what they are doing. Most tax sale investors can and should run their business solo or with very minimal help. Now, I've done the whole big team thing. I've had 17 staff members before, and it is an absolute headache. And the end result is that it often doesn't increase profits all that much. It's certainly not worth the time, expense, and other personnel-related issues with it. And lastly, there's not a single person on earth that will care as much about your money as you will. Doesn't matter how many employees you have, how much you pay them, how little you pay them. At the end of the day, they care about themselves the most. They care about their paycheck the most, not your money. So instead of going out there and try to figure out how to hire a whole bunch of people to do it for you, you need to take the time to learn what you are doing. You need to take the time to learn how to be efficient. Again, unless you're investing into the tens of millions of dollars a year, I would hold off on going out and outsourcing stuff. And when you finally do, please hire people that are skilled. Next one, tax liens are a passive investment. Some people will promote tax liens as easy, passive income, mailbox money. Buy a lien, forget about it, and just collect checks. Not quite. Now, tax liens do require much, much less work than tax deeds because most of the time you will realize your profit when you go check the mailbox and you get that check. However, it's not just a matter of parking your money and forgetting about it until that check arrives. There are certain deadlines that have to be met. There are processes that must be followed. There's notices that might need to be provided, and there's other things that you have to do outside of just cashing that check. And if you do something incorrectly, if you forget about that lien that you place, that lien might just become void and worthless. So remember that while tax liens are certainly more passive than tax deeds, it's not a completely hands-off approach. Next one, tax deeds are always better than tax liens, or vice versa. One size does not fit all in the tax sale business. Some people claim tax liens are always better. Just park your money, forget about it, get those checks in the mail. While other people swear that tax deeds are the only way to go. You don't want those low returns that tax liens provide. Instead, go for the home runs every time. Listen, both have pros, both have cons. Tax liens are great for investors looking for a slightly less involved investment that still provides an incredible return. Tax deeds are good for those willing to put in the extra work for more money. Which one is better? Depends on your goals. Next one. You can make a fortune overnight. And it's not always going to be promoted as making a fortune overnight, but I've seen people say, hey, I turn $100 into $37 million with tax deeds in a month, or something crazy, something outlandish like that. Yeah, absolutely. Grand slam, knock them out of the park deals do exist. But some people approach this business as a get-rich-quick scheme. A lot of times, these so-called experts out there do that because it helps them sell whatever training or program they're trying to promote. That way, however, by the time you figure out the reality of it, they'll be long gone. The reality is, it's a long-term business. It's a long-term game. Successful investors know this, and they will build up their business over time while remaining patient. If you are expecting to make a fortune overnight, you'll probably lose all your money that you're going to invest, and you'll definitely end up disappointed. Next one, just research the county property report. That's all you really need to look at. It's a very dangerous way of thinking. People often look at one thing, the county tax assessor's report, and they'll base their entire investment off of that alone. This surface level type research will ensure that you eventually inherit a massive issue sooner or later. Research for the tax sale business is a very holistic thing. It's very thorough. It involves a deep understanding of what you are doing. So take the time to learn what you're doing before you start going out there and buying properties. It's not just surface level research that will take you to tax sale success. Understand that right off the bat. The next one, people say to stay local. Real estate is local after all. Some trainers say pick one county, pick one state, stick to it, master that process. Because sadly, the fact is that they themselves have never invested out of state or even out of their county. They've seen mild success wherever they're located, and now they're trying to teach people all over the world how to invest. It's always fun to hear these same people refer to laws or market conditions as if everything is the same. Here's the issue. Focusing on one county or one state will put a glass ceiling on your earnings. That's exactly what happened to me. And it happens to hundreds and hundreds of my students as well. So you need to expand as needed, but do it smartly. Do your research. Go to one area, learn about it, and continue building that knowledge base of the new area. Eventually, you'll be investing in many different states, cherry picking the most profitable properties like myself and many of the Tax Sale Academy members are doing. Next one, properties are always sold for pennies on the dollar. This is a great tagline for some reason that people seem to buy into. Sure, you can absolutely get properties for pennies on the dollar. There's some crazy cheap real estate available at some tax sales. You can also get real estate, however, that sells at or even above market value. Just because it is tax defaulted does not mean it is a good property or a good deal, and it certainly does not mean that you need to go out there and buy it just because you can. Just like every investment, it takes strategy, it takes effort, and it takes being ready for the right opportunity to come along. Next one, tax sales are guaranteed by the government. And this kind of makes me chuckle because it's really such a word spin on the truth. Your money is not guaranteed by the government. The government does not care about your money. Instead, the process is guaranteed by the government through state statutes. The process of handling delinquent tax property is written into law. That is guaranteed. It's mandated through those statutes, mandated through those state laws. But whether your investment is profitable or not doesn't matter to the government. It depends entirely on you. So my suggestion here is to take the time to learn what you are doing so you can guarantee your own success. And after all, I'm much more likely to trust my own personal guarantee than the government's guarantee when it comes to my money. At least that's me. So anyhow, takeaway here. Not all advice is good advice. There's a lot of people out there that are pushing information that might apply to one market, might only apply to them, and they just don't realize it. Not all the things that you see online should be followed. Some of the worst mistakes that investors make come from listening to so-called experts. I know this because many of them get sucked in through advertising, fancy car posts, and other social media BS, which oddly enough, I don't advertise, I don't show up a bunch of materialistic things or anything like that. But once they go into the real world and they try to apply that same knowledge, they begin making mistake after mistake. And then many of them will join the Tax Sale Academy to learn, and that's when I understand these stories. That's when I understand that there's so much garbage out there that is being promoted as tax sale education. Now, I'm not saying you need to trust everything that I say blindly either. What you need to do is take everything that I say, everything you see online, maybe stuff you see in books, maybe stuff you learn from investor meetups, and you need to go through that information and apply it to the real world. And don't just go out there and take one or two bits of information and start buying all these properties based on those one or two things that you learn. Instead, maybe if you want to focus on one or two strategies, what you should do is paper trade it, practice it, use those strategies, and act as if you were buying properties that sold a year ago by looking at a tax sale auctions result list. And then figure out, would that have been profitable? Would it have not been profitable? Then take all this information, continue analyzing it, and continue deciphering it to figure out the best strategy that works for you, because every single person is different. Be patient, take the time to learn, start small, scale up, but by all means, take responsibility for your own business. Do your research, and again, learn what you are doing. Tax sale investing works when you do it right. Avoid the bad advice, make informed decisions, and build a business that will last you decades to come. Listen, if you enjoy our advice, if you want step-by-step guidance, I've got 1,000+ free videos. I got hundreds of podcast episodes. You can grab my book, Tax Sale Playbook, at taxsalebook.com for the cost of shipping, less than $5 in the US. And if you want the most comprehensive training that we offer, make sure you check out taxsaleacademy.com. But if somebody out there makes something sound too easy that success will happen in a week, or there's minimal information to learn, it's time to run the other direction. This business takes time, this business takes work, but it can change your life. That's all I've got for you today. Thank you so much for listening. I will see you in the next episode of the Tax Sale Podcast. I truly hope you got something out of today's episode. Take care and make it a successful day. See ya.